ahead of the 10th anniversary of China's Belt and Road Initiative, several countries, including India, the United States of America, the UAE, Saudi Arabia, and the European Union, have countered President Xi Jinping and the country of China. This has been done through a pact, a memorandum of understanding to establish what is being called the India, Middle East, Europe Economic Corridor. It aims to foster economic integration to connect Asia and Europe. Italy, a G7 power, is on the brink of exiting China's BRI meanwhile. So is the new economic connectivity corridor a new Indian spice route, one to rival the famed Chinese Silk Road? In today's debate on Easynomics, we have a special guest to help us unravel the answer to this very significant question. Somnath Mukherjee, CIO and Senior Managing Partner, ASK Private Wealth. Welcome, Somnath. You've written an article about this, and it's basically in some ways a mega trend. So I want you to explain to our viewers what exactly is this economic corridor. Is it a railway track across Arabian deserts, as you have written, or is it something else really?
No, hopefully this graduates to something a lot bigger than just a track that connects Haifa with Dubai, because that could be a rather building block rather than the project itself of the whole enterprise. The way to imagine this new structure is what can be called as an incipient first step to counter the Chinese BRI. So this call it the US-India BRI, the Boats and Rail Initiative to counter China's Belt and Roads Initiative. But this essentially brings to fore the ability to execute, imagine, and then translate on the ground large-scale infrastructure project that has multiple dimensions to it, not just a rail track. There is, of course, the primary use case that's been talked about, which is an alternate route between India and the Eurasian landmass, alternate to the Suez Canal. There is also talk in the MOU itself of data, hydrogen, as well as electricity passing parallel to the tracks being laid. So it's likely to end up being a lot bigger than just the rail track, which is the basic building blocks. And honestly, parts of it are already available within the Arabian Peninsula. The Etihad rail connects a bunch of key waypoints that are imagined as part of this trade route, as do certain lines between Israel and Jordan. So it is about putting the building blocks in place, but for a much larger initiative, which has both economic as well as geopolitical ramifications.
I was reading other commentary about this, and there is commentary which sort of talks about how the spice route has been, the ancient spice route has been actually played up beyond what was real, and it was actually India's trade and the subcontinent that was at the fulcrum of a lot of trade. Is it therefore an attempt by India to reclaim that glorious past, or is it rooted in current reality that we will never have China really helping us grow? China only wants to see us as a consuming market.
Yeah, so I think it's a mix of both. Just on the former, actually, forget the Silk Route. As recently as the 18th and the 19th centuries, and also the early part of the 20th century, British India, the British Raj, conceptualized India's security in terms of creation of buffer states and linkages across India's near abroad. Which meant buffer states of various sorts, Tibet, Nepal, Bhutan to the north, Afghanistan to the northwest, and the Persian Gulf to the west of India. And similarly, sea routes were meant to be protected through various political and military organizations out of ports based out of the Persian Gulf for the Arabian Sea, and the Sunda and the Malacca Straits for the Bay of Bengal. Uh, and in some ways, from our independence, since our independence, India has attempted in various shapes and forms to reclaim or inherit the legacy as the successor state of the British Raj. A lot of people don't realize or remember that till the mid 60s, the Gulf rupee, which is the Indian rupee issued by India, the Reserve Bank of India, used to be the legal tender in a variety in several countries in the GCC. So we have very deep linkages, but they have to be translated into modern reality as well as capabilities that we have on the ground. And over the last few years, we have tried to reclaim some of those inheritances or legacies. It's not surprising to see, how much energy has been put in by the government in the last 9 or 10 years in terms of deepening our relationships with the Gulf countries. So much so that instead of just being a one-way oil importing relationship, it has morphed into a multi-dimensional relationship. UAE, for example, while exact numbers are tough to come by, the UAE sovereign is likely to be one of the largest foreign investors in India. So there is both a historical as well as a contemporary aspect to the whole thing. But at the base, at the essence, this represents two things. One, in principles terms, it represents the same rationale which is driving China plus one for corporate America as well as a range of large corporations across the Western world, which is that for a very long time, certainly for the last 3 decades, redundancy has been sacrificed as the altar of optimization. Everything's sort of gotten optimized, and that included financial systems. And we saw a great example of what that means in the financial crisis in 2008. That includes trade routes like the one that we have between Asia and the European landmass, primarily through the Suez Canal. We saw what happened in 2021 when one ship, making a few mistakes of navigation, blocked off trade for several weeks, causing billions of dollars in losses to trade, as well as and a world that was barely coping with the COVID virus at that time. So there is need for redundant systems, and this represents an attempt to build a redundant system initially for India to connect with the European landmass, and hopefully in time extend that further eastwards for the rest of Asia also to link up with this if the project works. This has great possibilities, great promise. Part of it is around creation of redundancies. Part of it is also the simple organization of this construct. If you look at the main sponsors of the IMEE, you have the US, UAE, Saudi Arabia, and India, as well as the European Union. Now, look at the geopolitics. Most of these countries are largely in sync from a political perspective. There are very few, obviously, sovereign nations will always have things that they don't agree on completely. But fundamentally, all of these countries are broadly in sync to have mission critical issues that stem the execution if once we get to that, not if, but once we get to that. So there are lots of things going in favor of this, and hopefully now execution and performance will match up to the promise that this has.
A couple of questions. First, what is the likely role of the United States of America going to be? And I'll request my producers to bring up that map once again and stay with it on screen for some time, because I want to show viewers, if you look at the footprint as has been understood, and viewers, there are different other animated maps doing the rounds of social media. Frankly, I think the most conservative and accurate representation is what you have on the screen right now, because people are letting their imagination run wild. But Somnath, if you see this, there are two questions. One is the United States of America and what it will bring to the table, and then I'll come to the subsequent one on the export basket. What do you think the United States is doing here if it's going to stop somewhere, as we are showing the northern corridor connecting Europe and then ending up somewhere there?
No, United States is essentially the key sponsor of this initiative. It brings in the political cover for a lot of the countries that will be involved finally, and there will be more countries than those that have signed up in Delhi during the G20 summit. Israel, for example, has to be. It is the last mile of the rail link, so Dubai to Haifa, right? So Israel will get involved. Jordan will get involved. Jordan was not part of the ceremony in Delhi. So if you look at the whole list of constituents of this enterprise, including potential ones like Jordan and Israel, um, US has the greatest political equities, geopolitical equities with all of them, and that would include India as well. So the American role in ensuring that everyone stays on track once this project gets into execution mode and and stays true to the task of getting it executed will be the key role that it will play. Besides, also, the fact that the United States has the deepest and the most liquid and the most sophisticated financial systems in the world. And like any other infrastructure project, the key to success will be the financial structuring of this project. And one key differentiator, by the way, which I think differentiates this BRI, the boats and rail BRI, to the Chinese BRI, is just the quality of financial intermediation expected out of this. The Chinese BRI suffered a fatal flaw in terms of financial structuring in a range of projects, and we can see the outcomes in our neighborhood as well, whether it's Sri Lanka or Pakistan. We can see some of the outcomes of lopsided financial structuring. Now, with the United States and India as part of this group, expect the quality of financial structuring to be significantly better. And also, as the key shareholder and essentially the leader of both the key Bretton Woods financial institutions, the World Bank and the IMF, the United States will have an outsized role in determining funding and encouraging multilateral institutions to come on the table to provide long-term funding. So the US is sort of the glue that ties a lot of these states together because of the sheer equity that it has with all the constituents.
Okay. In terms of the current export basket, and viewers, if you see the first leg of this, there is logic. The Gulf states will continue to export a lot of fossil fuels, at least in the near term, and India will continue to also import many of those fossil fuels. We've done Russian imports, but there are perhaps going to be limitations on that. Once built, and we don't know when this will happen, how would this influence the export-import basket out of India? Because infrastructure that is built will necessarily also be dovetailed with the kind of goods that are being transacted, and a large part of our services exports don't need this kind of a corridor. They work on digital corridors, Somnath.
Right. But we do have a very ambitious plan of increasing merchandise exports. The entire PLI program has been rolled out in the last 3 or 4 years to enhance the level of merchandise exports, where India has been a traditional laggard in the context of Asia. More than the kind of exports, I think what will happen is this done properly, and if it stays true to promise and it ends up being a viable, cheaper alternative. There are some academic studies, for example, that show that this route may well be 40% quicker than the existing route from India to Europe through the Suez Canal. If that stays true to that promise, then what we shall see is a reduction of transaction cost, and hence an increase in the sheer volume of trade and the intensity of trading that happens between India, the Gulf region, and then onwards into Europe. So I think specifics will have to await the final blueprint and the final concept of the project once they are available. But currently, we can think of it as a fairly exciting new possibility. And there are bits and pieces of it. And as I said, it's not just the merchandise trade aspect of it. There are also going to be power lines and data lines and hydrogen lines running parallel to the tracks. And if you missed it yesterday in the bilateral between Saudi Arabia and India, there was one agreement signed about undersea electricity cables where India aims to export electricity to Saudi Arabia. Now, you can imagine many more things like that. You can imagine large power plants in India exporting electricity through these electricity cables right up to Dubai and beyond. Who knows? So there are several bits and pieces of it that will plug in together. So this is not just a logistics initiative. This is not just a trade route. This is actually a little bigger than that. This incorporates a larger economic vision for this part of the world, which is the Eurasian landmass, as well as around a system of trade that is open, that is rules bound, and so on and so forth. A lot of it contrasting through optics and maybe a little bit on reality as well, with the Chinese visions that have been doing the rounds with China's BRI.
Since you speak about China, that brings me to that question. Given the ambitions that China had spelt out via the BRI, and viewers, if we were to look at this map again, the Chinese BRI, at least in what was outlined, much of it is not really happening, and we don't know if other nations will follow Italy in trying to exit it. It's basically right at the bottom, if you look at Colombo and then going up, and route overseas,
Right,
where Pakistan has played a very strategic role as a puppet state of China. The question, Somnath, is will China allow this to happen? Will it? What kind of hurdles can we expect from China really to this ambition?
I think most of the hurdles will be in the form of politics and competing interests. The Middle Eastern countries, including UAE and Saudis, have deep relationships, economics with China. India has a very large trade relationship with China. So does the US, which has a very large trade relationship with China. So the politics of it are certain to come in. But at the end of it, it is not just China. I mean, we saw the Turkish president say earlier today that no such corridor between India and the Eurasian landmass is possible without the participation of Turkey. And now that can involve some conversations as well. But those are at the realm of politics, and that is precisely why I said US is, as a sponsor, is so critical, because it's the glue and it's the influence that can sort through a lot of the politics on this. And it's the only country with the requisite political and economic strength to stonewall opposition, including from China, if required in terms of executing parts of this project. I think the key difference, though, between the Chinese BRI and this initiative is simply twofold. One, I mentioned earlier about the sheer financial structuring of it. If you look at BRI projects, they were structured in a kind of lopsided manner that we in India are also somewhat aware of, given what happened to some of our infrastructure projects in the, say, 2010 onwards. High on debt, project viability is doubtful, and with the addition of the fact that China came in not as an equity investor but as a creditor. If you look at most of the projects, including the ones in our neighborhood in Pakistan and Sri Lanka, China came into these projects not as equity holders but creditors. Creditors in foreign currency executing projects that have minimal to zero foreign currency earnings potential. So you not just have a project that's high on debt, you're also loading up foreign currency liabilities on countries that are already on the edge. Whether it's Sri Lanka or Pakistan, they are structurally
Some
challenged on
conditions.
their external accounts as well. And on top of that, in none of those projects do China have a skin in the game as a market access, as a consumer. Now, if you look at all these three things, this project actually does exactly the opposite. One, with India's and America's participation, financial structuring should be right up there. Between India, Europe, and the US, the best
Right.
financial bandwidth available. Second, this has India as one participant. And India, by staying out of the BRI, actually played some role in ensuring that a lot of the projects were not really viable, especially the connectivity projects that were being envisaged. But now with India as part of this, a lot of this project, for example, can be viable because India is a part as a market as well as an
Right.
exporter.
Right.
So there are several key differentiators that differentiates this BRI from China's BRI, and that sort of encourages me a great deal in terms of its potential for success.
Absolutely, and like you have written and like you said, Somnath, and other commentary also, this is very ambitious, and we are not even going to talk about the costs and the timelines because the proponents themselves have to flesh out the details, and what we are picking up from our sources is that is work in progress, and hopefully we'll get to know more about this. Obviously, it's going to be a multi-decadal kind of project with hundreds of billions of dollars, which will hopefully be spent in time and at the right place. But it is an ambition which we had not thought of. At least I didn't imagine that this would happen. And that it's happened and been around the successful G20 summit should provide us some good
Right.
hope. And that's why there is a sentiment boost that we have seen in the markets also briefly. Somnath Mukherjee,
I
thank you
must
very much.
say just
Yeah,
one
yeah, go
point,
ahead.
Siddharth, on that. From an investor's perspective, it's too early to start picking winners and losers. While I won't get into
Absolutely.
specific stocks and companies, but this is still a longer term thing. It's positive. It is going to result in significant, hopefully, investment opportunities down the line. But today is not the time. We don't have enough clarity on the minutiae to be making picks on winners and losers out of
Absolutely,
this.
absolutely. And if a portfolio were to be constructed around this, it would be a portfolio for our children or perhaps grandchildren as well. So
Hopefully
Somnath will.
not. Hopefully not. Yeah.
Okay, that's a good point. But we'll come to that conversation soon once again as more details filter in. But like Somnath said, it's perhaps also going to not be happening in the very late. It will happen at some point very, very soon. Thank you very much, Somnath Mukherjee, for your time with us today. With that, it's a wrap on this episode of Easynomics. We'll be back with more. Until then, do stay tuned in to BT TV. Bye-bye.